Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So as you can see, in general, it's mixed price action across the board, not only on the euro currency, on the British pound, especially on the gold market. And it's understandable in the expectation of the Fed meeting in the two sessions. So in general, technical background, technical picture stands tricky on the market. As we discussed previously, personally what I do not like here is that market inability to show any significant pullback here, especially when it had some fundamental support to do this. In a statement, for instance, Jerome Powell in Congress, when this pullback has started and happened, when he said that there will be no interest rate change and they treat still inflation as a temporary. So even on the background of these events, euro currency wasn't able to show more or less significant pullback, start some retracement. It stands under pressure here. As you know, the sentiment analysis that we have made shows that investors are losing some belief in euro currency. As you could see, that the overall open interest is dropping, and net long position is also decreasing gradually within the year. Finally, from the technical point of view, when you have this so strong acceleration here, and you have the OP target just within 150 pips below, that is bad combination for taking the long position on the daily chart. Maybe Fed will tell something. Maybe market will show this upward direction. We do not know. But from the perspective of the real background, we do not have the technical factors and technical signs that market stands in the bullish reversal. We don't have bullish patterns. We don't have some performance. We don't have some attempt to go higher on some thrusting action on intraday charts. Nothing. And from the technical point of view, we don't have the real reasons to buy. I mean, on the daily chart. Also, I mentioned previously some kind of the bearish dynamic pressure here as well. So if you would like to take the position based only on the expectation that maybe Jerome Powell will tell something, that more the gambling. So you're just making bet on result like the, I don't know, some sport event. But you do not have any reasons to suggest that definitely will happen. That's why personally on a daily chart, I do not see any reasons for taking the long position. Bearish tendency still stands here. Market can't show even minor bullish reversal swing. And for me, it would be better to wait drop back to the 1620, completion the OP, and reaching of the monthly conference support that we also discussed in our weekly report, and consider taking the long position right here. So in the current situation, I'm more tending to this idea. On the intraday charts, it's very choppy and sloppy price action that you can see. Yes, we have some bullish minor signs, for instance, such as a retracement here, but you should understand that this retracement stands in the free space. So here we are not at some fib support. We are not at the daily average sold. So in such circumstances, divergences are not very reliable patterns. Currently, the one thing that we could just say is that market keeps relatively and holds relatively accurate the lows of the 117.50. And if you do not want to wait for a 1620 major daily target, and you would like to take part in the Fed statement, be on the market, theoretically, of course, you could consider taking the long position against these lows. Although I already explained why I'm not really fascinated with this idea, but still, well, who knows, maybe it will work, I don't know. If you're ready to carry this risk, you could consider, for instance, taking the position against these lows. If you would like to sell you also could consider some, I don't know, maybe breakout of this range, placing stop sale around 1745. We already also talked about this. In a way of breakout, you probably will be in by the stop sell order. But you understand that really could be tricky right at the eve of the Fed, just because it could be a lot of volatility and spike, fake breakouts, and you could be just will be trapped in the wrong direction. This is also possible. That's why my preferable position is just do nothing and wait when the Fed results, and mostly from the technical point of view, the reaching of this area, to take the long position. For a short position, we already said everything. Now about the possible entry on the long side. So take a look. You could recognize here some harm. Indeed, it exists. So this drop here, these lows on the hourly chart in particular that we discussed, as you can see, despite we suggest that might be downside breakout, market was able to stay here and showing our upward action. Here it might be some retracement that you could consider for taking the position. Now market stands at the first level, some catalyst of the ABCD pattern is forming. It's OP. If it will go to the XOP lower, theoretically your risk will be very small. It's around 30-35 pips with the stops below these lows. And if Fed indeed will take the dovish statement, as might be some upward action here could happen. But the problem is, guys, that on the 4-time frame chart, take a look, we have two confluences. And the first one stands right in an area that market has to break to show some bullish actions. So it's 1830, 1835. So, but well, still here's some room to this area, and if market will turns up somehow, you at least will be able to move stops to the break even. Theoretically, probably you could treat it as a kind of the cup and the handle here, because round and bottom is forming, and this might be some reaction on the Fed statement. I don't know. That's the just, as you can see, phantom background that you theoretically could use to try to buy your, but as I said, for me it's not very attractive, and the dominant factors of the sell-off here in existence of the OP means for me more than some performance on the 4-time frame chart right here. But this is very personal, and if you think and you accept this risk and you think trying to get to make some bet on the Fed performance, for instance, well, this is the setup that you could consider. So let's see what performance market will show us. Theoretically, guys, in general, we have some bullish signs on other markets, as we discussed. On the gold market, we have some grabbers. On the cable, you could see recently was not bad upward performance. So some indirect bullish signs exist in the market, but we do not have still the clear and strong technical background, technical stuff. No patterns, no some directional stops. So that's what makes the situation a bit difficult.